All right, today we're going to crack open a professional technical analysis report. The stock is Centene Corp, ticker symbol CNC. Our mission here is to decode all the jargon, follow the clues, and really figure out what the experts are seeing inside this stock's code.
So let me set the scene for you. Picture this. A stock takes a massive nosedive, and then, all of a sudden, it just rockets back up, even higher than before. It's a classic Wall Street mystery, right? Is this the start of some huge new rally, or is it a trap right before another plunge? That's the exact question we're digging into today.
And our case file for this investigation is the analyst report on Centene. So we're going to put on our detective hats, we're going to sift through all the evidence, the price action, the trading volume, the technical indicators, and we're just going to see where the clues lead us.
Okay, first things first, let's establish the scene of the crime. Section 1 is all about the stock's recent, and I mean very dramatic, price movements. This is the roller coaster itself.
It all started right here. On July 8th, Centene was riding high, hitting a peak of nearly $33. This was the top, the calm before the storm, the moment right before the big drop.
And wow, what a drop it was. Just a few weeks later, on July 29th, it's like the floor just fell out. The price absolutely plummeted to just over $25. That is a massive plunge, the kind of move that creates some serious panic in the market.
But this is where the plot really thickens. Instead of staying down, the stock ignited this fierce rebound, soaring all the way to $38.70 by October 3rd. Now, what's so interesting here is that it didn't just recover, it blew right past its old high. So the key takeaway is that we have conflicting evidence right from the start. A terrifying drop, followed by a truly heroic recovery. So let's move on to our next piece of evidence and see how this story builds. In Section 2, we're following the money by looking at trading volume. You can think of volume as the size of the crowd. It tells us how many people are involved and how strong their conviction really is.
And this chart tells a huge part of the story. During the panic on July 25th, a staggering 63 million shares were traded. People were rushing for the exits. But now look at the rebound on October 3rd. Sure, 15 million shares is still a lot, but it's significantly less than the panic volume. This suggests that the selling frenzy was way more intense than the buying rally that followed. And that's a key insight, because it tells us the fear driving that sell-off was much more powerful than the optimism driving the recovery. A really important clue.
Okay, now it's time to call in the expert witnesses. In this section, we're going to look at some key technical indicators from the report to get a deeper, more, let's say, scientific analysis of the price action. Our first expert witness is the Relative Strength Index, or RSI. The easiest way to think about this is like a hype meter for a stock. It measures the speed and change of price movements. If the hype gets too high, the stock is considered overbought. If pessimism is overwhelming, it's oversold. Simple as that.
So, what's our hype meter telling us about Centene right now? Well, according to the report, the RSI score is 78.14. Now, for some context here, the scale only goes to 100, and anything over 70 is generally considered to be in that overbought danger zone. So, yeah, this number is definitely flashing a warning.
And that leads us to a pretty clear verdict from our first expert. The hype meter is flashing red. This is a strong warning sign that the recent rally might be overextended and that it could be due for a pullback. The momentum is high, but maybe a little too high. All right, let's bring in our second expert witness, the 200-day Simple Moving Average, or SMA. Now, this indicator isn't so much about short-term hype, it's all about the big picture. It shows us the stock's average price over the last 200 trading days, and that gives us a really solid baseline for its long-term trend.
And wow, this is a huge piece of the puzzle. While the current price of $38.70 looks impressive after that big rebound, it is still trading way below its long-term average of nearly $50. Now, in technical terms, that long-term average acts like a major price ceiling, or what analysts call resistance. It represents a historical price level that could be really difficult for the stock to break through. This tells us that despite the recent rally, the stock is still pretty weak from a long-term perspective.
Okay, so with all these conflicting clues, a strong rebound fighting against overbought signals and that long-term resistance, the evidence is pointing to two very different scenarios. So let's lay out the two possible futures for Centene.
On one hand, you've got the bull case. That's the optimistic scenario, which the report calls an upside burst. If the momentum continues and the price breaks through that first resistance level of $39.40, the path could be clear for a run toward $40.10. But then, on the other hand, we have the bear case, the downside snap.
If those warning signals are right, the stock could fall to its first support level or price floor at $37.46 and could even drop back towards that $33 range.
So this brings us to the final section. After weighing all the evidence, the bullish momentum versus all those bearish warnings, what is the analyst's ultimate conclusion? What's the final call?
And the final verdict is a low confidence hold. So what does that mean? It means the evidence is so perfectly balanced, so contradictory, that the analyst can't confidently recommend buying or selling. The risk is just simply seen as too high in either direction.
The report captures this conflict perfectly with this one line. It says, the stock wrestles bullish trend thrust against rampant overbought clamor. It's such a great visual, right? It's a tug of war. The powerful upward momentum is in a direct fight with all these loud warning signs that the rally has just gone too far, too fast.
And all of this leaves us with a fascinating final question that really gets to the heart of investing and analysis. When all the data, all the charts, and all the experts are pointing in completely opposite directions, how do you decide which clue is the one that truly matters? That's the real challenge at the center of this whole Centene story.